U.S. stock futures flickered near the flatline Wednesday night as the major averages continued to languish in the start of the second quarter. Futures tied to the Dow Jones Industrial Average were unchanged. S&P 500 futures and Nasdaq 100 futures gained less than 0.1%. During Wednesday's main trading session, the Dow slipped 0.1% to register a three-day negative streak. Meanwhile, the S&P 500 and Nasdaq Composite inched up just 0.1% and 0.2%, respectively. Investors' fears that the Federal Reserve may keep rates higher longer weighed on stocks. Fed Chairman Jerome Powell said on Wednesday that policymakers will need more proof that inflation is moving toward the central bank's 2% guideline before rates can come down. Atlanta Fed President Raphael Bostic also told CNBC that he thinks one cut might be in the cards. As a result, Wall Street has adjusted its expectations for rate reductions. Fed funds futures trading data now suggests a 62.3% likelihood of a cut at the Federal Reserve's June meeting, down from about 70% last week, according to the CME FedWatch Tool. In addition, companies added 184,000 workers in March, according to ADP. The result trounced Dow Jones' estimate of 155,000 and spurred investors' fears that rates may indeed stay higher longer. The 10-year Treasury note briefly topped 4.4% and touched a high for 2024. "There's a lot of short-term volatility and nervousness in the bond market," said Larry Tentarelli, chief technical strategist for Blue Chip Daily Trend Report. "I don't think that the Fed really has any reason to cut rates. The economy is so strong and we still have not beaten inflation yet." Meanwhile, he thinks the equity market is showing signs of a bullish rotation, or a diversification of growth beyond the megacap tech names that have powered the market rally since last fall. "I wouldn't be surprised to see leadership move into other sectors besides tech. I think we'll probably see a healthy rotation into some of the sectors that should benefit from stronger economic data," said Tentarelli. "Some of the Magnificent Seven stocks maybe won't outperform like they did last year. On the economic front, investors will be looking to initial jobless claims numbers for the week ending March 30th. The U.S. trade deficit as of February will also be released Thursday morning. All eyes are on Friday for the release of March's nonfarm payrolls." The S&P 500's energy sector ended Wednesday with a 0.66% gain, bringing it to a record close for the first time since June 2014. A cluster of stocks within the category also hit 52-week highs on Wednesday, including ConocoPhillips, Diamondback Energy, pipeline company Kinder Morgan and Marathon Petroleum. The surge in the energy sector, now up nearly 16% in 2024, comes as crude oil futures touch their highest levels since last October, rising amid geopolitical tensions and OPEC+ policy.